Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, it has been a very challenging week for the Australian dollar and for many other currencies, as the US dollar has slightly backed off from its highs around 90, 70, 80 on the index. Now, the dollar index, which measures the greenback strength against a basket of 6 major currencies, has weakened all the way back down now to the lows around 90.20. However, if we look at the Australian dollar, we can see that in this turnaround is that the actual weakness of the US dollar didn't really take much toll on the Australian dollar. With retail sales coming out around negative 4.2, is the market has dented the upside attempt. Now, from looking from the technical perspective here, is that the MACD is holding beneath the zero axis, which is a bearish signal. Keep an eye on the RSI 3-day period look back, because if we break beneath the 50 midway axis, or the midway point, is that we could see further weakness to the downside. Initial support comes in around 77.15, but I do feel the market's biggest task is to take out the level of 76.65. Now, if we get beneath this level, then it opens way down towards the region of 75 cents. As long as we don't get a close above 77.95, then the bears should continue to remain in this region that I've highlighted in the top side around 78 to the bottom side around 76.65. The euro dollar, as you can see here, is still attempting to try and climb higher. Now, we did get a break above 121.65, but no follow through. Although the MACD is still negative, keep an eye on that, because if that pattern does break down further, then this would see a reversal. I do feel that the US dollar has got a lot of work now to recover and attempt to cut the neckline on the inverse head and shoulders. And if we see a break above 90.80, then this should see initial, for the US dollar that is, we should see the euro drop back towards its initial target of 120 and reassess from there. Dollar yen, well, this trend line, if we look at it on a weekly basis, has been very, very strong and reliable for the bears, because the market every time touches, we get a strong rejection. And just recently, the market did struggle again around that 104.1045. Now, looking at the technical aspect, the MACD is breaking down. Along with that, the RSI is attempting to recover. So as long as we see a break of either 103.35 or close under there on New York, we'd see a move to 102.80 and then a break from there to 101. However, I've still got a bit of a view that the bullish price may actually take one more challenge to the top side around this 104.1045 area. Now, a close above there, you can see there's quite a bit of an opening and could see a rise back up towards 105 to 106. But let's see how it plays out and see who can actually determine when we go back into the den between the bulls and bears and see which one of the challenge comes through. The pound, although we have seen last 4 days of bullishness and into today a little bit of a pullback, as you can see that the resistance still remains at 137.45 to 65. It's a bit of a key point, because as long as we don't break above there, then we do expect to see a pullback and expect to see eventually a challenge back on the level of 135. As you can see beneath there is 133. Now, if we do get a break above 137.65 and a close from New York, then that would leave me neutral just in the short term. Another attempt to the upside at 142.25.45 for sterling yen didn't come through. There has been a few attempts here, as you can see, but there's a bit of divergence here on the RSI, and a flat MACD does give further evidence that we should eventually see a turn down towards this level of 141.25. Close under there should expose the weakness towards 139. I'm neutral above 142.50, say, just to make sure we have got a clear break. And I'd rather reassess if it does break above there to see where the next move will come through. Although we've seen a very strong candle there, and also the fact is that the market was a little bit hesitant towards this 1,878. Now, from the retreat as you can see coming into play here, and a little bit of a hanging man from the Japanese candlestick does suggest that we still may see a challenge back towards that false break level of 1,820. Close beneath there exposes a region of 1,765. Now, the gold has been pretty much been bullish throughout the period of, say, going back to late 2020. One thing to take into assess, if you're fundamental, is that with Joe Biden now the president, may see a little bit less aggression in terms of the previous president. So therefore, might find that gold safe haven may start losing its appetite and therefore could see a little bit of supply coming back into the market. Given that, and also from the technical aspect, I would not rule out a test back towards the bottom side of 1,820, while 1,878 is intact. Wrapping up with oil, well, the market's still finding a bit of a struggle to claim that resistance area around $54 a barrel. I still am in view, and technically now, as you can see from the RSI breaking through, along with the MACD, that we are in a bit of a bearish threat, and therefore could see a move down towards the region of $49. Take a look at the report. There's a couple of levels there that do come into play, and the risk is if we see a move under 49, could see a drop down towards the $44 region. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report. Hope you enjoyed a great start to the day and to the weekend.